What's up, everyone? In today's episode, we're going to be going over some solid setups and predictions for this week. Last week, there was a lot of action that happened in the markets, and this week, we have a whole lot of opportunities. So you guys better stick with us. We have a lot of great setups to go over and some important things to know, and we're not wasting any time as usual. So with that being said, Tom, let's jump right into today's episode.
Yeah, Mike, last week we were talking all week about the big event coming up on Friday with the Jackson Hole Symposium and Powell. And I will say, Powell definitely brought in a lot of volatility as expected. The SPY actually ran up pretty well at the beginning, all the way up to like 441, and then dipped all the way down to 435 before closing up at 441 again. So that S&P 500 had an insane move on Friday. And if we zoom out, we kind of got close to that low of last week, which was down around 433, but we ended up holding at 435. And I'm wondering going into this week, Mike, if this will end up playing out as a bit of a higher low, and then we end up moving back up. We've been watching these key trend lines on the SPY over the past couple weeks as well, and we're getting kind of close to the top end of this again. So I will definitely be watching this 442 and 444 resistance this week. If we end up hitting off of those levels and then moving back down, I think that we're still going to be in that nice bearish scenario. But if we start to really break out above these with some nice momentum, then this little bearish run that we've been on might finally be over. So it's going to be a big week, Mike. We have some more earnings on the way as well, but those big tech stocks are going to be so key to see where they go, like Tesla, Apple, and others. They were all recovering back up on Friday pretty well, at least at the end of the day.
Yeah, and you can't forget about Nvidia either. It was running up after earnings in an awesome way, and then it just like hit a brick wall and got rejected pretty hard. But whether you're looking at big tech stocks right now or just the overall market, especially on a daily chart, we can see that it hasn't been all sunshine and rainbows lately. Over the past couple of weeks, we've definitely seen more selling pressure and bearish price action than we've basically seen all year. Now, here's the thing. Right now, the market's at a spot where it's like not super bullish, but it's not super bearish either, and it's just starting to become a little bit more choppy than anything else. But what's definitely worth noting, and it's crazy to even say this, Tom, because this year is just flying by, but we're heading into the month of September, and if we look at some historical data, we can see that September is by far the worst months for the market. With data going all the way back to 1970 up to now, basically September is just that one month that just sucks for the market, and it's definitely worth noting, and it's just when you come into this part of the year, how can you not mention it?
Exactly, and September will be kicking off this Friday, just so everybody knows. And then next week we'll be pretty much be seeing all, it will be in September at that point. So it's going to be a pretty it's going to be an insane month, Mike. And I'll tell you what, August already sucks. So if that's any type of indication on how September is going to go, well, it's definitely not looking good to start here. But with the SPY running down into September and with the historical data the way it is, it definitely gets you thinking right now, because we've been falling down so much. A lot of people are saying that this pullback's over. I don't know about you, Mike. I feel like the pullback has just begun. We might actually have a few days of crazy price action back up or some retests of resistances, but I still see us going lower here over the next couple weeks, because whenever you zoom out, it's like, sure, we're down, but we're not really down at all compared to how much we've ran up this year.
Exactly. Like, that's the thing. Like, I'm not in the camp like, oh, the market's going to go to zero or we're going to see like a 50% correction. I don't think that. But what I can definitely see is like a further pullback. And, looking at SPY specifically, that like 433 area, if it rips below that support area, to me, that would be like a very bad warning sign for the market. That has acted as the recent low. And if that gets taken out, I think things can get pretty nasty, assuming like the volume's strong and, there might be some news to back it up. But that's the main thing I'm watching for now. Until we see a break below that, I'm just a little bit more neutral than anything else. And, something else that's worth talking about while we're on this topic is basically liquidity and its relationship to the market. So it sounds super boring, but it's actually way more important than you realize. Basically, what we can see right here is how closely correlated central bank liquidity is to the market overall. So basically what we can see in the dark blue line, that shows liquidity. And basically what that means is how much money is being pumped into the markets across the world, right? And the light blue line, you could see the market. And they basically always move together. But now they are seeing like their biggest divergence than they've seen in a long time. And basically what's happening is what we could see in the dark blue line is money is getting sucked out of the financial system where the market is still like in la la land, right? It's so close to high still in the grand scheme of things. But the main point is we really haven't seen a divergence between these two data points this big in a long time. And with the way it's looking, liquidity is not set to rise a lot in the short term. So what does that mean? It means the market should come down quite a bit. So either way, this is just a warning sign, but the main thing to take away from it is, if you look at the past couple years or so, it's showing that the market can get pretty nasty if liquidity does not pop up soon, and liquidity is not set to pop up soon.
Yeah, exactly. And, maybe liquidity will pop up like later next year or something like that, like if the Feds start revising things and etc. But for right now, that's definitely not the case. And every time that this blue line gets above, well, I should say every time the light blue line gets above the dark blue line, it generally has big pullbacks, like in 2020. And then even whenever the dark blue line heads above the light blue line, they still end up converging together. And I definitely think that they'll start to converge a little bit more. And considering how high the market still is, I could see some pretty good room down. So it's just more data to kind of back up some of this downwards price action and some of the, I would say, upcoming downwards price action that we're probably going to see.
No doubt. So, Tom, last week we had the star of the show, Nvidia, report earnings. It had a bunch of attention with it. While this earnings week isn't as exciting, what's on the schedule?
Yeah, it's not as exciting, but I will say there are some pretty big stocks, especially ones that we've talked about a lot the past couple of years on here, like NIO. That is going to be a huge one this week. NIO, even Best Buy, PDD is on the radar as well. There's been a lot of China stocks reporting lately, but then CrowdStrike and Salesforce, Chewy even. I mean, those are some big stocks, and a lot of people even look at HPQ and HPE. So we're going to have a fairly big week. It's not the biggest week out there, like you said, Mike, but even like Lulu on Thursday, it's just a lot of good companies mixed in here that will have some pretty decent earnings moves too.
I think the most important one to watch this week is NIO right before open on Tuesday. This stock moves a lot, and if it has a nice earnings release, this thing can move in a giant way. So keep a close eye on this one. But Tom, what would you say is your most anticipated earnings stock for this week?
This one might be a little bit strange, but I'm actually going to be watching Broadcom or AVGO on Thursday and after hours. I know that they've been getting a lot of hype lately, and I'm sure a lot of people are going to like CrowdStrike and Salesforce too, but Broadcom's probably going to be the biggest one I'm watching.
All righty. I thought you were going to say Big Lots on Tuesday before open.
Oh, no, I should have.
I'm kidding.
That's my favorite store. How'd you know?
Oh, gosh. So, yeah, here's the earnings calendar for this week. Feel free to screenshot it. But, Tom, this is where it gets really boring, so you better make it quick for us. What's the economic calendar look like?
Oh, man, it's like nothing this week. So, Thursday, we have PCE data. Friday, we have unemployment rates. We will talk about this later in the week, but for now, it's definitely nothing too crazy to look at.
All right, thank you for making it quick. Let's get right into the fun stuff, which are some setups for tomorrow and the rest of this week. One stock I'm watching very closely is Amazon. So Amazon has definitely been controlled by the bears over the past couple of weeks, but nothing too crazy. But long story short, it has like a decent support level right around like this 130 area. Basically, if we see like a nice rip below that, I think Amazon has a lot of room down. I do like trading Amazon intraday. It normally has some pretty good moves, so I'm watching it very closely for a move to the downside. I would love to see like a strong break below that 130 area.
Yeah, that's a big support coming up. I mean, that 130, 129, I mean, anywhere right around there. There's been so many bounces lately, and Amazon's been kind of following this big overhead trend line too. I'm curious to see where it goes this week. So hopefully it tests that level pretty well there. And talking about another big stock is Tesla for me, Mike. They've been kind of triple topping last week, very close to 240. You can see that they did get up to like 242 and 244 a little bit there. So I'll be watching for a break above 240 this week to the upside. If we get a nice break, I'll look at some calls. But if the market falls over, I'll be looking for a push down below 226, which is right below the recent range. I honestly think it'll be to the downside, but we'll just have to see how that price action plays out. Considering how the Jackson Hole event went on Friday, I'm very mixed on the overall market heading into this week. Like, I'm still bearish overall, I'd say, over the next couple months, but in the short term, it's been getting a little choppy like we've been talking about.
Yep, no doubt about that. Another stock I'm watching pretty closely is GLD. So GLD has seen a lot of great big money bullish flows into it lately, and it's starting to pop up a little bit, starting to show some daylight, so that's always good to see. But long story short, I am watching GLD to the upside for this week. I would love to see a break above the resistance level right around like 178.50. If it breaks above that with some decent price action, I think it can make for a pretty solid short-term trade.
Yeah, I love GLD as well. I'm hoping that it can start to inverse the market here and start to go up, and I was happy to see it fly back up Friday. So let's see gold get some good price action coming in. And man, my next stock, Mike, has a huge support that we're sitting at. It is AMD. We've talked about this stock a ton. It's been falling off a cliff last week. If we end up falling under $100 this week, this is going to be a huge, huge level. Number one, it's a big support and a big psychological level. Number two, we go confirm it on the book map with the X-ray vision. You can see on Friday, there were huge orders here on AMD at 100. We bounced off of it, and then there's even more liquidity coming in at $100, $99, and $99.50. So I'm definitely going to be watching AMD, Mike. If the support holds, I might try to trade it up. If it breaks under, though, I'll definitely be going for puts. Puts are the way I'm going to lean, but it's always good to see these big levels with the book map and the X-ray vision, and that $100 level is definitely no slouch here.
If you guys have not tried Bookmap yet, you have to try it out. Basically, it shows you exactly where buyers and sellers are sitting at. Like Tom said, it's basically X-ray vision for the stock market. Also, if you need help finding support and resistance levels, this literally shows you where they are right on the chart. It makes it super easy, and it shows you exactly where buyers and sellers are sitting at. Definitely check it out. It's going to be that first link in the description in the comments down below. If you end up trying it out, if you use our link, you will save. We have some special offers attached. So check it out. It's that first link in the description and the comments down below. But with that being said, Tom, let's jump right into tomorrow's momentum plays. And with the first one, we have PENN to the upside.
Penn Gaming, nice recovery by them finally, right? If they end up breaking out above $24, I will look at calls. That's about I would say 5 cents over the high of day from Friday, but just make them break 24.
All right, and then with the next one, we have CCJ also to the upside.
Yeah, nice to see them recover up. That was a huge recovery out of them. If they break that high around 36.50, then go ahead and look at calls.
All right, and then with the last one, we have BABA for both directions.
Yeah, BABA's been wild lately. If they break out above $90.10, look at calls just above $90. I like that resistance. If they end up falling under $89, then maybe eye up those puts. But I will say I'm kind of hoping for calls on this one.
There we go. So we have that downside level for BABA. If it breaks below it, we're watching it for puts. We have the upside level as well. If it rips above that, we are watching it for calls. And then don't forget about CCJ and Penn, both of which the upside as well, only if they rip above their upside levels. But with that being said, Tom, it is now time for the $4.2 million big money trade of the day. Today, we are looking at ticker symbol SE. So SE has had a very crazy, wild, and hard to explain ride over the past couple years. We have to go on like a daily or weekly chart for this one because it gets pretty crazy. But, you know, before the pandemic, this stock was trading for around like $30 a share. And then throughout like 2021, it got as high as like $370 a share. Then all of the growth stocks started pulling back, so this thing literally fell off of a cliff, literally, and now it's back to the 30s. So this stock has been all over the place over the past couple of years. It's very oversold, and long story short, someone dumped $4.2 million betting that this stock will see some upside potential again in the short term. Now, this trade's going to get a little bit advanced, but don't worry, I'm going to break it down in a nice and easy way. Long story short, someone bought the 55 strike calls that expire on January 17th of 2025. Then they shorted the SE 75 strike calls that expire on January 17th of 2025. And all in all, it cost them like a little bit, basically $4.2 million. It's a call debit spread, but if you want to make your life easy, you can just get shares of this or just buy calls that are somewhat close to the money and have some time. But this big money trader will make multiple millions of dollars if SE is at or above $75 a share by January 17th of 2025. I like the setup, Tom, but I will say this. I would not be surprised if this one does take some time, but I think the overall risk reward is really awesome.
Yeah, and I think that, like, for traders trying to follow this right now, like, if you're going to try to follow this with the spread, you know, keep in mind it's going to be a very long-term play, out to 2025, guys. So just remember that. Like, it might go down for a couple months. It might go down for a couple weeks before it starts finally coming back up. And I will say, with how low they are, I expect quite a bit of recovery once the recovery does actually happen. But that is a pretty crazy play to see, Mike. $4 million thrown into this spread. And like you said, the target's mainly up around 75. So that's a pretty big way away from here. That would pretty much be the stock going up over 100%. So that's going to be a big jump. I definitely like the play. And I would say if you guys want to follow it, the safest way, in my opinion, would just be to start grabbing shares of SE while it's down here. You could follow it with the spread too, obviously, but just keep in mind it's a very long-term play.
Exactly. So well said. Either way, keep a very close eye on this one. Not every day do you see a setup where you have $4.2 million going into a play like this. So make sure to keep a close eye on it. But Tom, we are set for a pretty good week. You know, we're coming off some big events from last week. We have a lot of good setups brewing. So I'm pretty excited. And I think this one should be full of opportunity. And speaking of opportunity, we had a lot of members do pretty well last week. The Profits channel was loaded up. And I want to give a special shout out to today's member of the day, Lando Trade Climb, who had an awesome Friday. So great job. You grew your account by around 22%. Keep up the great work. You're still new to the chat, but you've been an awesome member so far. So shout out to you. Thank you for everything. But Tom, do you have any last thoughts? Anything else you're watching? Anything else you're holding out on us for tomorrow?
I wish I had some stuff I was holding out on, Mike, but for this week, it's going to be very important to watch this price action to see where we're going. The main things that I am really watching are those overhead trend lines and resistances on SPY, like 442 and 444 are going to be huge. They've been huge the past few weeks, and I expect them to continue to be pretty big levels. So if we end up like breaking these trend lines to the upside, maybe you'll have to be adaptable and look at calls, but I'm really looking for those hits and bounces, then movements back to the downside like we've been seeing. So it's been a fun past couple weeks to trade, Mike. It's been amazing. The bots have been killing it out there too. It's been amazing with this volatility. So I hope that we continue to get the volatility coming in the way we are, and we continue to get the fun trades like we have been. And hey, if you guys have been having any fun trades, throw them in the comments down below. I know on Friday, so many people caught some amazing moves. Like, look at the way SPY moved. The bulls were catching some good plays. Some bears were catching some good plays. It was just a good day to trade with the volatility.
Absolutely. So I don't care if last week was amazing for you or horrible for you. Let's do everything we can to make this week one of the best weeks of the year. Go into the week with an open mind, keep your head up high, and of course, keep that risk management in place. So many traders get a little bit caught being greedy or not having stop losses or things like that. So make sure your risk is covered. Keep your head up high, and let's have an awesome week, guys. There should be a lot of awesome opportunities. If you are new to the channel, I was going to say, destroy that subscribe button. When you do, you'll see our videos recommended to you more often, and you'll just hear more of us. In every single one of our videos, we talk about big money, multi-million-dollar trades, and everything you need to know about. But with that being said, guys, thank you so much for watching, and let's have an awesome week.